finviz.com. You can click around, you'll find their economic calendar. It has all of the forthcoming data releases to expect in the coming week. And recently we got we got some housing data,
Here we
and
are.
2 data points. Yes, the first data point was yesterday, on Wednesday, on Tuesday, not today's Wednesday. So Tuesday, yesterday, we got the
But when you
existing
watch this
home sales.
video, we don't know
Could be
what day of the
later.
week it's going to
Yeah.
be.
Yeah. So on Tuesday the 21st, let's just say that existing home sales came out. We had 4 million, and that's a down slightly from the month prior, and just shows kind of a downtrend. Really, that's the idea here. And then today, on the 22nd, we had the mortgage applications index, and we see that has contracted by 13% and 7% in the prior month. So clearly, mortgage sales, mortgage applications, home sales are showing that the housing is slowing down. Housing industry is slowing down, and that's kind of a leading indicator in a way, because it lags a slowdown in the real economy is going to lag the housing, right?
Right.
So as people lose wealth in their homes, they restrict they start consuming less and demanding less, and so demand will be reduced as this deleveraging process occurs, and that'll eventually spill over into other sectors, whether it's stocks or consumer goods or whatever. So the housing slowdown is one of the main, it's probably the most important asset for in terms of its correlation with the overall economy, the real economy. And as it goes, so does the real economy, right? So just kind of take this as a indicator that even though we're talking about the Fed pivoting and potentially having the return of a bull market and avoiding a recession, that there's still a lot to be said about whether or not that's going to happen. We don't really, it's up in the air, and that a recession driven by housing and interest rates is still very much possible.
And we're seeing just the beginning, the precursor to that possibility. I mean, actually, from a macro perspective, this is really what we've been waiting for. The Fed has been raising rates, and the job reports have been too strong for what they'd like to see as far as trying to get the economy to slow down and bring down inflation. So the idea is that really this is what the Fed is gearing towards. And like you said, this is going to have a ripple effect in many other parts of the economy, not just for people's home wealth and how that is going to affect consumption and prices. But when you look at development and new homes being built and the economy, the jobs that are surround that. So
yes, this
is definitely buckle up time and be prepared for the times ahead. But of course, the good news is this is the sooner we get to these points, in the economy, is the sooner that the Fed can have the power to start saying, okay, we've seen enough of a slowdown and we've achieved what we wanted to achieve with inflation, and we're ready to start going the other direction.
Yeah.
So, but yeah, I mean, it definitely looks like we are. Last week, we talked about the Fed's announcement on the balance sheet. They're talking about years on the balance sheet. So it would be nice if the interest rate slow down or the raising of the rates, if that was able to turn around at the end of 2023, 2024, that would be quick.
Yeah, great.
And great and good news. So,
and before we shift gears, I think that's possible when you consider what's going on globally with, like, say, Japan and China maintaining their liquidity,
right,
maintaining their easy loose money policies. What that could do is it could have an exchange rate effect on the dollar, where the dollar strengthens as they weaken, and then you could get this dual strengthening, right? So one side's driven by policy at the Fed, the other side's being driven by weaker foreign currencies. And you could even see the dollar strengthen too soon because of that effect of what's going on globally.
If you like this information and you would like to learn about what's going on in the economy, the macro outlook, and how it applies to blockchain and the opportunities, you like this channel, hit the subscribe button, notification, hit the like button. That helps this knowledge get out. And of course, we will leave links below. You can support the channel below. And of course, if you like one-on-one help, then you're saying, God, I would like to learn more about proof of work, proof of stake, layer ones, layer twos, what airdrops, IBC, interoperability. How does this stuff work? A Web 3.0 wallet, storage, security. That's right. We can help you out. Just fill out this information, your name, your email, what you'd like to learn about, and drop us a little message, and we'll be happy to get back to you and set up a time for some one-on-one consulting or some group tutorial sessions if you are with a firm or institution that is looking to catch your people up to speed. That's what we do, catch you up to speed. And I think that we've caught you up to speed on what's going on in the world today, right now. Have a beautiful day. Namaste. Until the next time. Thank you.